The valuation of trademarks. We can consider how trademarks can be appraised within a more general valuation of intangible assets. This is a video taken from a chapter of my book about the valuation of digital intangibles published by Palgrave Macmillan. We can say that a trademark is a non-monetary intangible asset that has some peculiar economic properties. It does not have any physical substance, it is immaterial, but it grants rights and economic benefits to its owner. Intangibles tend to be more specific than other tangible assets, and they incorporate higher information asymmetries, so they have a higher risk profile and lower, if any, collateral value. I mean, whenever the company passes from a going concern to a breakup value, the residual value of intangibles normally can be very limited. Patents and trademarks might retain some value because they are protected from third parties from copying, but other intangibles like goodwill normally completely destroy the residual value. You can have a reference to a general introduction to the valuation of intangibles in another video that I have posted on YouTube, and also you have a copy of these slides on ResearchGate. Trademarks or brands are intangibles that have some distinctive characters: originality, truthfulness, novelty, and lawfulness as requirements for registration and for filing. We can also have digital brands that represent an informatic and IT extension of the trademarks. Trademarks have to be considered, first of all, from an accounting perspective, and they are an ongoing challenge for accountants. International accounting standards is still a big issue for trademarks and, more in general, patents. We have to consider, for instance, International Accounting Standard 38. Intangible value tend to be hidden in the balance sheet by inadequate accounting for prudentiality reasons. But this is not the case neither in the income statement nor in the cash flow statement. An intangible asset in general can be separated from other assets if they have to be recorded in an autonomous way, and they arise from contractual or other legal rights. Trademark in law term indicates any sign that can be graphically represented. Specifically, we can indicate words, including the name of a person, drawings, letters, numbers, sounds, the shape of a product or its packaging, combination or color tones, and we can use them to distinguish the trademark from other products that are not branded. Trademarks and brands are considered synonyms in most cases, and trademarks are registered for protection and typically valued for litigation or licensing purposes. According to the OECD Transfer Pricing Guidelines of 2017, a trademark is a unique name, symbol, logo, or picture that the owner may use to distinguish its products and services from those of other entities. And also, we can say that a trademark registration may continue indefinitely. Patents tend to expire normally within 20 years. Trademarks do not. They can be recorded and renovated each year, and so they can continue with no time limit. This is an important feature that also has to be considered within the evaluation paradigms. Also, even the OECD states that the term brand is sometimes used interchangeably with the term trademark and trade name, and so they can be considered synonyms. And again, according to OECD Transfer Pricing Guidelines, we can distinguish between commercial and marketing intangibles, whether the latter ones are going to include also trademarks. The brand or the trademark has a distinctive function, a qualitative guarantee function. If a product is branded, this kind of brand incorporates the quality of the product, an evocative or advertising function. And also trademarks tend to have a strategic value. They are a symbol of product differentiation. They can be adapted to market changes. They are normally international. They bring to leadership, celebrity. They can reach a sort of status symbol. They guarantee legal protection against counterfeits. They also allow to follow strategies of customer loyalty and brand awareness. They can have a bargaining power for what concerns distribution, and they can increase market shares or market attractiveness. Trademark valuation is normally performed in many cases like mergers and acquisitions, in case of bankruptcy, for sale or licensing, for conflicts and disputes, as a collateral for bank loans, for accounting purposes, or even for taxation. The evaluation can be carried on with an interdisciplinary approach considering the legal analysis, strategic and marketing purposes, economic or accounting issues. And we can evaluate trademarks even considering the international standard ISO 10668 of 2010. Also, as we said, we can have a license of a trademark. This kind of license can be used and can be included within an upfront payment for ongoing pre-commercial payments as a cost reimbursement for the trademark. Consider a milestone. Whenever a milestone occurs, then I make the payment, or I get it if I am the owner of the trademark. We can also have annual minimum royalties, and we can have research support, sub-license income sharing. We can consider a license for manufacturing or sales or profit sharing. A royalty fee can be based on the money value of the product or on the units of product sold, and royalties are very important even to assess the value of the trademark. We know that trademarks are a challenge for accountants, and they tend to be underrepresented in the balance sheet. And we also know that since they are currently expensed in the income statement, they are not recognized as assets in the financial reports. And the disclosure of intangible expenditures in financial reports is seriously deficient. Normally, this kind of cost, for example, advertising cost to support a trademark, these costs are going to be recorded in the monetary OPEX, in the monetary operating expenditure. And so we have to detect from the income statement. Then we can use economic valuation for the damage in case of counterfeiting practices, the estimate of the appropriate royalty rates or the appropriate rent of the company that owns the brand, as a parameter just in case we have a strategic operation within the company, M&A, merger, acquisition, spin-off, etc. We can use them from brand managers to remunerate them in case of liquidation, sale and leaseback, in case of value of the assets of distressed firms, transfer of the trademark, tax estimates of the normal of the fair value even within transfer pricing disputes. And we can also evaluate the trademark for pledge, mortgage, and usufruct of our brand. In some cases, we can have weak brands, brands that have a weak value, that have a very poor distinctive power. they also guarantee low differentiation. It is not easy to understand the difference between the branded and the unbranded product whenever the brand, the trademark, is a weak one. And in this case, there is a limited reactivity to changes in the competitive market. There is a limited geographical distribution, a low legal protection, a very small consumer retention. Consumers are not attracted by the weak trademark. They might go away and choose other products. And these are the cases to be considered when we evaluate weak brands. According to the International Valuation Standard 210 dedicated to the intangibles, we have three main approaches of valuation: the income approach, the market approach, and the cost approach. We are going to use all of them in a complementary way for the valuation of our trademarks. Here we can consider a graph, again with the market, cost, or income approach, and a lot of cases. For example, within the market approach, we will see that the enterprise value divided by the EBITDA, by the capacity of the company to generate cash and liquidity within its income statement. We can use the weighted average cost of capital to discount cash flows, operating cash flows, and to get a market value. We can use even the cost approach that is derived from the income statement, or we can have expected income approach, for example, a royalty relief that we're going to define. Let's consider that I am a company, I do not own the brand. How much would I pay as a royalty to use it? This is an important parameter for valuation. We can have a with or without consideration. Let's say that the value of the company without any brand is 100. The value of the firm with the brand is 180. So there is a differential value of 80 that is belonging to the brand or to the trademark. We can have greenfield methodologies or other incremental cash flows or other methodologies that we can use. And also the valuation can be performed within an integrated balance sheet, income statement, and cash flow statement account. From the balance sheet, we can get some clues of the value of trademarks if they are recorded within the assets. We can also get some extra clues within the income statement, especially, as we said, within the monetary OPEX, within the operating expenditure that also considers advertising cost or any marketing cost to keep up the value of the trademark. And also we can have a cash consequence, a liquidity coming in from the exploitation of the trademark. This is within the cash flow statement. We have here a slide that is going to recall the main valuation approaches, again according to the International Valuation Standard 210, that is consistent with the ISO 10668. So we can have trademarks that are linked even to IT and web domain names, or even to digital branding. We can have a cost approach, income approach, or market approach. They can be linked to the brand equity, to especially the market approach, as we shall see, to comparability factors, to discounted cash flows, incremental value with or without value, with the brand, without the brand, or again, relief from royalties. And the purpose of valuation can be the fair market value, an investment value, the intrinsic value of the company that owns the brand, or in some very sad cases, the liquidation value. Let's consider now very quickly the cost approach. According to the cost approach, the value of an intangible and also of a trademark can be assessed by the sum of the capitalized cost that the company should incur to realize the intangible from scratch. This approach does not consider any maintenance cost and the opportunity cost of time, just in case the company would like to reproduce the brand from scratch. There is a difficulty in finding costs incurred in the past, and there are two main approaches that fall under the cost approach: the replacement cost and the reproduction cost. We might also use the income or financial approach. Why we combine income with financial? Income comes from the income statement, from profit and losses. Financial approach comes from the cash flow statement, liquidity coming in and going out. In the long run, they tend to coincide. And as we said, we typically assess the value of trademarks or brands within a long time horizon because they do not expire. We can have an income approach, and as we anticipated, we can have relief from royalty, which allows estimating the income of the trademark by deducting from the notional royalties that would be paid to a third party for the use of the intangible. We can have a with or without approach, as we said, which is the incremental value due to the exploitation of the trademark. We can have also an excess earnings, just in case we want to calculate and to assess the contribution of the trademark to produce extra earnings. We can also have other less used cases such as the greenfield approach using cash flow projections. The distributive approach is like the relief from royalty when a profit split is used to estimate an appropriate royalty rate, for instance, a royalty rate of 5%, or we can also discount the differential, the incremental income or cash flows. We might also have a market approach, just considering the caution included in the International Accounting Standard 38, according to which an active market cannot exist for brands or trademarks because each such asset is unique. Unicity is a factor of strength but also weakness. Let's consider the following paradox. If a trademark is unique, then it has a higher value, but comparability is strongly impaired by this characteristic of trademarks. If you are not standard, it is difficult to compare you to somebody or something else. Again, with the market approach, we can use an empirical approach, a differential incremental assets due to the existence of the trademark. For instance, consider the Q of Tobin, the market value divided by the book value, the accounting value of the trademark or of the company. And this incremental value is dedicated to assess the value of the trademark. We can also consider in listed companies a price book value index. And these are the main methods that we are going to use within the evaluation of trademarks. For any further reference, you can, again, as we said, refer to my book, and here you have a reference to the publisher, or even you can download this PDF presentation from ResearchGate.